The Curious Case of Capital One. Who's the real boss? Hey everyone, and welcome back to the channel. Today, we're diving into the world of finance, specifically a question that might have crossed your mind while swiping your Capital One card at the checkout. Who exactly owns Capital One? At first glance, it seems like a straightforward answer. After all, it's a bank, right? Shouldn't there be a bigger bank calling the shots? Well, buckle up, because the answer isn't quite as simple as you might think. Capital One has carved a niche for itself in the financial landscape. Known for its innovative approach and quirky marketing campaigns, it's become a household name. But where does it fit in the complex web of financial institutions? Let's rewind a bit. Capital One started its journey in 1994, not as a full-fledged bank, but as a credit card division of a different company. Back then, the concept of mass marketing credit cards was just gaining traction, and Capital One saw an opportunity. Fast forward a few years, and Capital One breaks free, becoming its own independent entity. But here's the twist: it doesn't become a traditional bank holding company, the kind that owns multiple banks. Instead, it takes a unique path, transforming into a unitary savings and loan holding company. Now, hold on, that sounds complicated. Let's break it down. A traditional bank holding company can own a variety of financial institutions, from commercial banks to investment firms. But a unitary thrift, like Capital One, focuses on a single type of institution, a savings and loan association, also known as a thrift. In Capital One's case, the single thrift it owns is a special kind called a federal savings bank. These banks have a long history in the U.S., dating back to the 19th century, and they focus on providing retail banking services like savings accounts and mortgages. So, here's the key takeaway: Capital One isn't owned by another bank. It's actually a holding company for a single, specialized federal savings bank. This structure gives Capital One some flexibility in its operations compared to traditional bank holding companies. But that's not the whole story. Remember how Capital One offers a wide range of financial products beyond just savings accounts and mortgages? That's because, even though it's a unitary thrift holding company, it can engage in certain non-thrift activities as long as its core federal savings bank meets specific regulatory requirements. This allows Capital One to offer the credit cards, auto loans, and other services we're familiar with. It's a clever way to operate within the regulations while still catering to a broader customer base. Of course, the financial world is constantly evolving, and Capital One's ownership structure isn't immune to change. There's always the possibility that they might choose to become a traditional bank holding company in the future, depending on their strategic goals. So, there you have it. Capital One isn't owned by another bank, but it operates as a unique type of holding company for a federal savings bank. This structure allows for some flexibility, but it also comes with regulations. With that said, thanks for watching, and until next time, keep an eye out for those financial mysteries lurking in everyday life.